Introduction. Welcome to the world of stock market, where everyday money meets big opportunities. Imagine walking into a bustling vegetable market on a sunny morning. You see fresh tomatoes, carrots, and potatoes piled high in wooden crates. A friendly farmer in overalls smiles at you as you hand him a few dollar bills. In return, he gives you a basket overflowing with crisp vegetables. You walk away happy, knowing you'll turn those veggies into a delicious meal for your family. That's simple buying and selling. Money for something valuable. Now, picture the same idea, but instead of vegetables, you're buying pieces of massive American companies like Apple, Tesla, or Coca-Cola. That's the stock market in a nutshell. The two cartoon images you're looking at right now perfectly capture this truth. On one side, the vegetable market, with happy shoppers exchanging cash for produce. On the other, professionals in suits trading money for shares of companies, with charts showing profits or losses. The big blue arrows in the middle scream one message. It's the same idea. You're buying something valuable with your money, hoping it grows or provides value over time. This book, written especially for beginners in the USA, will give you complete knowledge of the stock market in the simplest possible way. No complicated jargon, no boring lectures, just clear explanations, real American examples, everyday stories, and plenty of visuals in your mind, like those cartoons. By the end of this introduction and part 1, you'll understand how the US stock market works, why it matters to regular folks like you and me, and how smart use of AI plus stock market equals money can change your financial future. The core truth from the cartoon, it's all about exchanging value. Look at the second image titled Same Idea, Buying Something with Money. On the left, a farmer sells vegetables. You give money, you get vegetables. On the right, at ABC Corp headquarters, you give money, you get shares, ownership pieces of the company. Later, those shares might go up in value, profit, green arrow, or down, loss, red arrow, just like vegetables might stay fresh or spoil. In America, the stock market is where millions of people buy and sell ownership in companies every single day. When you buy a share of Apple, AAPL, you literally own a tiny slice of that trillion-dollar company. If Apple makes great iPhones, sells more services, and earns huge profits, your slice becomes more valuable. You can sell it later for more money than you paid. Or many companies pay you dividends, like a thank you bonus, just for owning the shares. Real US example. Think of someone who bought shares of Amazon in the early 2000s. Back then, it was mostly an online bookstore. Today, it's everything from cloud computing to streaming. That original investment turned into life-changing wealth for many everyday investors. The vegetable seller grew his farm into a giant business. Same principle. Why should a regular American care about the stock market? Because it's one of the best ways for ordinary people to build wealth in the United States. Unlike buying a house, which needs huge money up front, you can start investing with as little as $50 or even less through apps like Robinhood, Fidelity, or Vanguard. Retirement. Most Americans rely on 401k plans that invest in the stock market. The famous S&P 500, which tracks 500 big U.S. companies, has returned about 10% per year on average over long periods, including dividends. Beating inflation. Your savings in a bank earn almost nothing these days. Inflation eats away at your money. Groceries cost more every year. Stocks have historically outpaced inflation. Ownership in America's best companies. You can own pieces of Starbucks, Nike, Microsoft, Google, Alphabet, or even electric vehicle leaders like Tesla. The cartoon shows happy people on both sides, farmers and business professionals. The stock market is democratic. Whether you're a teacher in Texas, a nurse in California, a truck driver in Ohio, or a tech worker in New York, you can participate. Understanding the big picture, bulls, bears, and the American economy. The U.S. stock market is the largest in the world, centered on Wall Street in New York. Major exchanges include NYSE, New York Stock Exchange, the big one with the famous bell ringing. NASDAQ, tech-heavy, home to Apple, Microsoft, Amazon, etc. When people feel optimistic about the economy, new jobs, strong company earnings, low interest rates, prices go up. That's a bull market, like a bull charging forward. When worried, recession fears, high inflation, prices fall. Bear market. But here's the beginner-friendly truth from the cartoon. Short-term ups and downs are like daily price changes at the vegetable market. Tomatoes cheap today, expensive tomorrow due to weather. Smart investors focus on the long term. Example, during the 2008 financial crisis, the market crashed. Many panicked and sold, but those who held or bought more shares of great companies saw massive recovery and gains over the next decade. The vegetable farmer who keeps planting even in a bad season eventually harvests big. How does money actually move? Following the cartoon arrows. In the first image, you see arrows showing money flowing from buyers to sellers and back. In the stock market, 1. You buy shares from someone selling them, or through a company's initial public offering, IPO. 2. The price is set by supply and demand, just like bidding on fresh produce at a farmer's market. 3. Companies raise money by selling shares to fund growth, new factories, research, hiring. 4. Investors make money through capital gains, sell shares for more than you paid. 6. Dividends, regular payments from profits like McDonald's or Procter & Gamble. AI plus stock market equals money. This is the exciting modern twist we'll explore throughout the book. Artificial intelligence tools can analyze thousands of company reports, news, and market patterns faster than any human. Imagine having a super smart assistant that helps you spot opportunities or manage risk. We'll cover AI-powered stock screeners, predictive tools, robo-advisors like Betterment or Wealthfront, and even how companies like NVIDIA, the AI chip leader, have exploded in value. Part 1. Stock Market Basics from Zero to Confident Beginner. Let's dive deep into the foundations, using simple language and many real examples from the American market. 1.1. What exactly is a stock? A stock is a share of ownership in a company. If a company has 1 million shares and you own 1,000, you own 0.1% of the company. Types of stocks. Common stock, most popular, gives voting rights and potential dividends. Preferred stock, usually higher dividends but less voting power, more like a bond. U.S. example, when you buy 1 share of Coca-Cola, KO, you're a part owner. You get a tiny claim on every bottle sold worldwide. Coca-Cola has paid dividends for over 60 years, reliable like a steady vegetable harvest. 1.2. What is a stock exchange and how does it work? It's like a giant marketplace open during business hours, 9:30 a.m. to 4 p.m. Eastern Time, for NYSE and Webull. Brokers, apps, or firms connect buyers and sellers electronically. You open a brokerage account, taxable or retirement, like IRA 401k. Deposit money. Search ticker symbols, e.g. MSFT for Microsoft. Place an order. Market order. Buy at current price immediately. Limit order. Buy only if price drops to your target. Cartoon connection. Just as you negotiate or pick the best-looking tomatoes, you choose when and at what price to buy shares. 1.3. Key players in the U.S. stock market. Individual investors, people like you and me. Institutional investors, big funds, pension plans, hedge funds. Companies issuing shares. Regulators, SEC, Securities and Exchange Commission, protects investors from fraud. Analysts and media, CNBC, Yahoo Finance, etc., provide information. 1.4. Fundamental analysis versus technical analysis, made simple. Fundamental analysis. Look at the company's health, like checking if vegetables are fresh. Earnings, profits, revenue growth, debt levels, management quality, competitive advantage, moat. Example, Warren Buffett, the most famous American investor, buys companies like Apple or Bank of America when they are strong businesses selling at reasonable prices. He thinks like a farmer buying good farmland. Technical analysis, studying price charts and patterns, moving averages, support resistance levels, volume. Beginners should start with fundamentals and long-term holding. 1.5. Risk and reward, the green and red arrows. The cartoon clearly shows profit-loss. Stocks can go up a lot. Tesla went from under $100 split adjusted to over $1,000 pad at peaks, but can also drop sharply. Tech stocks in 2022. Risk management rules for beginners. Never invest money you need in the next 5 years. Diversify. Don't put everything in one stock. Buy index funds like S&P 500 ETF, SPY, or VOO. Start small and learn. Dollar cost averaging. Invest fixed amount every month regardless of price, like buying vegetables weekly. Real story. Many Americans who started investing regularly after the 2020 crash have seen strong gains as the market recovered and hit new highs. 1.6 different ways to invest in the stock market. 1. Individual stocks. Higher risk, higher potential reward. 2. Index funds and ETFs. Best for beginners. Own hundreds of stocks in one purchase. Low fees. 3. Mutual funds. Professionally managed. 4. Bonds. Safer, but lower returns. Government and corporate. 5. Options and futures. Advanced, risky. We'll cover later. 6. Robo-advisors. AI does the work for you. AI power. Tools like ChatGPT or specialized AI platforms can summarize earnings reports, compare companies, or generate watch lists. In later chapters, we'll show how AI helps spot trends in sectors like AI, renewable energy, or healthcare. 1.7. The American Dream and the Stock Market. From the vegetable market vendor saving to expand his stall, to the office worker building retirement wealth, the stock market fuels growth. It helps companies like NVIDIA, AI chips powering everything from self-driving cars to data centers, innovate and create jobs. Historical performance, long-term. S&P 500 average annual return, Part 2. How to analyze stocks, turning the vegetable market into smart investing decisions. In Part 1, we saw the big picture through those two powerful cartoon images. Buying vegetables with money at the farmer's market is the exact same idea as buying shares with money in the U.S. stock market. You give cash today, hoping the thing you buy, carrots or Apple stock, will either feed you well or grow in value. Now, in Part 2, we're going deeper. How do you choose which vegetables, stocks are worth buying? How do you know if they're fresh, overpriced, or a great long-term deal? This part is written for complete beginners. We'll use simple language, everyday American examples, and plenty of real stories from the U.S. market. You'll learn fundamental analysis, checking the health of the company, technical analysis, reading price charts, and how AI plus stock market equals money gives you a massive edge today. By the end, you'll be able to look at any stock and make smarter decisions instead of guessing. 2.1. Fundamental analysis, checking the quality of the company, like inspecting vegetables. Fundamental analysis is like walking through the vegetable market and carefully examining the produce before buying. You check color, freshness, smell, and price per pound. In stocks, you examine the company's business health. Key questions to ask. Is the company making money? Is it growing? Does it have strong leadership? Is the price fair? 1. Earnings, net profit. This is the most important number. Companies report earnings every quarter. U.S. example, Apple, AAPL, consistently reports huge quarterly profits from iPhones, services, and wearables. In 2024-2025, Apple's earnings per share, EPS, remained strong even during economic uncertainty. If earnings keep rising over years, it's like a farmer whose harvest gets bigger every season. 2. Revenue, sales. Top-line growth shows demand. Example, NVIDIA, exploded because of AI demand. Revenue jumped dramatically as data centers and gamers bought their GPUs. Owning NVIDIA shares was like buying seeds of a new supercrop that everyone suddenly needed. 3. Price to earnings ratio, PE ratio. This tells you how expensive the stock is relative to its profits. Low PE, under 15 to 20, might mean a bargain. High PE, 30 plus, means investors expect fast growth. Real story. In the vegetable market, you wouldn't pay $10 for a single carrot. Similarly, Tesla, TSLA, often trades at high PE because people believe in its future in EVs, energy, and robotics. But if growth slows, the price can drop sharply, exactly like the red loss arrow in the cartoon. 4. Debt and balance sheet. Good companies don't drown in loans. Look at cash reserves and debt levels. Example, Microsoft, MSFT, has strong cash flow and manageable debt while investing heavily in AI, OpenAI partnership, Azure Cloud. It's like a farmer who saves money for new equipment instead of borrowing too much. 5. Competitive advantage, economic moat. What protects the company from competitors? Brand, Coca-Cola, Nike, network effect, Meta, Amazon, technology leadership, Nvidia and AI chips. Warren Buffett loves wide moat companies. They're like prime farmland that keeps producing year after year. 2. Reading financial statements, simplified for beginners. Companies file reports with the SEC Edgar website, free for everyone. The three main ones: income statement, shows profit and loss, like your monthly family budget. Balance sheet, snapshot of what the company owns and owes. Cash flow statement, shows real cash movement. Most important, profits can be manipulated. Cash is king. Beginner tip, use free websites like Yahoo Finance, FinViz, or Seeking Alpha. They summarize everything in easy charts. AI advantage. Modern AI tools can read 10K annual reports in seconds and summarize risks, growth drivers, and comparisons. Tools like ChatGPT, Perplexity, or specialized platforms, e.g., AlphaSense, Grok, turn complex filings into plain English. This is where AI plus stock market equals money starts shining. Humans can't read thousands of pages quickly, but AI can. 3. Technical analysis, reading the price chart, market weather forecast. While fundamentals tell you what to buy, technical analysis helps with when. It's like checking daily weather before going to the vegetable market. Basic chart patterns, uptrend, higher highs and higher lows, bullish, green arrows. Downtrend, lower highs and lower lows, bearish, red arrows. Support, price level where buyers usually step in. Resistance, price level where sellers dominate. Key tools, moving averages, 50-day and 200-day lines. When price crosses above, it's often bullish. Volume, high volume on price rise equals strong move. Candlestick charts show daily open, high, low, close, like little vegetables with shadows. U.S. example, look at the S&P 500 ETF, Chicago, during 2023 to 2025. After dips in 2022, it broke above its 200-day moving average and entered a strong bull run, driven by AI enthusiasm. The cartoon's blue arrows show money flowing when momentum is positive. Warning for beginners, technical analysis works best combined with fundamentals. Don't day trade as a newbie. It's like trying to guess tomorrow's tomato prices every hour. Most successful Americans invest long-term. 2.4. Valuation methods. Is this stock cheap or expensive? 1. Discounted cash flow, DCF. Estimates future cash and brings it to today's value. Advanced, but AI tools make it easy. 2. Comparable analysis. Compare to similar companies. For example, compare Coca-Cola to Pepsi. 3. Dividend discount model. Perfect for stable dividend payers like Procter & Gamble, PG, or Johnson & Johnson, J&J. Cartoon connection. In the vegetable market, you compare prices across stalls. In stocks, you compare valuation multiples across the sector. 2.5. Major sectors in the U.S. stock market. The U.S. market is diverse, like different sections in a big farmer's market. Technology, Apple, Microsoft, Nvidia, Google, Alphabet. AI is transforming this sector. Healthcare, Pfizer, Eli Lilly weight loss drugs, United Health. Financials, JP Morgan Chase, Berkshire Hathaway. Consumer, Amazon, Walmart, Starbucks. Energy, ExxonMobil, renewable leaders like NextEra. Industrials and defense, Boeing, Lockheed Martin. AI sector boom, companies building AI infrastructure, Nvidia, AMD, Broadcom, or using AI, Microsoft, Google, have delivered massive returns. This is the modern supercrop everyone wants. 2.6. How AI supercharges stock analysis. AI plus stock market equals money. This is the game changer for regular Americans in 2026. AI stock screeners. Tools like FinViz with AI filters or trade ideas scan thousands of stocks instantly. Sentiment analysis. AI reads news, social media, X, Twitter, and earnings calls to gauge mood. Predictive models. Machine learning forecasts earnings or price movements based on patterns. Robo-advisors. Betterment, Wealthfront, or Schwab Intelligent Portfolios use AI to build and rebalance diversified portfolios automatically. Personal AI assistants. You can ask compare NVIDIA and AMD fundamentals right now and get a clear summary with pros, cons. Real example. An investor using AI in 2023 could have quickly identified the AI boom in semiconductors by analyzing patent filings, job postings, and revenue projections, something that took humans weeks. Caution. AI is a powerful tool, not magic. Always verify. Markets can be irrational in the short term. The cartoon shows both profit and loss arrows for a reason. 2.7. Building your first watch list and portfolio strategy, step by step for beginners. 1. Open a brokerage account. 2. Start with 3 to 5 index funds or ETFs. VOO, S&P 500, QQQ, NASDAQ 100, VTI, total market. 3. Add 5 to 10 individual stocks you understand, companies whose products you use daily. 4. Use dollar cost averaging. Invest $100 to $500 every paycheck. 5. Review quarterly, not daily. Diversification rule. Never put more than 5 to 10% in one stock. The cartoon shows many people trading. Spread your money like a smart shopper buys from different stalls. 2.8. Psychology of investing. Controlling emotions. The market tests your emotions. Greed during bull runs and fear during crashes. Best strategy. Have a written plan and stick to it. Successful investors like Buffett stay patient through volatility. Story. Many who bought during the March 2020 COVID crash, when everything looked terrible, made excellent returns by 2023-2025 as the market recovered strongly. 2.9 Common analysis mistakes beginners make. Falling in love with a stock. Bias. Ignoring macroeconomic factors, interest rates, inflation, elections. Over-relying on past performance. Not understanding the business model. 2.10 Practical action steps after reading Part 2. 1. Pick 3 companies you know, e.g., your favorite brand, and check their Yahoo Finance page today. 2. Compare their PE, revenue growth, and 5-year chart. 3. Try one free AI tool. Ask it to explain a stock's fundamentals. 4. Set up automatic monthly investments. 5. Track your learning in a simple notebook or spreadsheet. By mastering analysis, you move from being a random buyer at the vegetable market to a smart shopper who knows quality and value. You understand when the green profit arrow is more likely and how to avoid big red loss arrows through research and patience. The U.S. stock market rewards those who put in the effort. With AI tools now available to everyone, regular Americans have never had a better opportunity to participate. Building your portfolio, smart strategies, diversification, and turning knowledge into real money. Welcome back. In the first 2 parts, we used those 2 clear cartoon images to understand the basics. The vegetable market on the left shows you handing over money for fresh produce. The right side shows the exact same idea in the U.S. stock market, handing over money for shares of great American companies. Part 1 gave you the big picture of how the market works. Part 2 taught you how to analyze individual vegetables, stocks, using fundamentals, technicals, and AI tools. Now, in Part 3, we move from picking good produce to building an entire smart shopping system, your investment portfolio. This is where regular Americans turn knowledge into actual wealth. We'll cover proven strategies, how to spread risk like a smart shopper, different ways to invest, and especially how AI plus stock market equals money makes building and managing your portfolio easier than ever before in 2026. Everything explained in simple American English with real U.S. examples and plenty of practical steps. 3.1. What is a portfolio and why do you need one? Your portfolio is simply your collection of investments, like having different baskets at the vegetable market, one for tomatoes, one for carrots, some potatoes, and maybe some fruits for variety. Putting all your money into just one stock is like buying only tomatoes and hoping they don't spoil. Diversification protects you. The goal? Grow your money over time while managing risk so you can reach goals like buying a house in Texas, funding college in California, or retiring comfortably in Florida. U.S. Reality Check. The S&P 500 Index, top 500 American companies, has historically returned around 10% annually over long periods. That means $10,000 invested consistently can grow into hundreds of thousands over decades thanks to compounding, the real magic of the stock market. 3.2 Core Strategy Number 1. Diversification. Don't put all eggs in one basket. The cartoon shows many people trading, not just one. That's the key. How to diversify. Across asset classes, stocks, bonds, maybe a little cash. Across sectors, tech, Nvidia, healthcare, Eli Lilly, consumer, Walmart, finance, JP Morgan. Across company sizes, large, Apple, mid and small caps. Across geography, mostly US, but some international via ETFs. Beginner portfolio example, simple and powerful. 70% in broad US stock index, VOO or SPY, S&P 500 ETF. 20% in bonds or bond ETFs for stability. Part 4. Advanced Strategies, Risk Mastery, and Supercharging Returns with AI in the U.S. stock market. We've come a long way. The two cartoons at the beginning of this book still guide us perfectly. The vegetable market on the left shows everyday people exchanging money for fresh produce they believe will nourish their families. The right side shows the exact same principle in the American stock market, exchanging money for shares of strong U.S. companies, with green profit arrows when things go well and red loss arrows when challenges arise. Parts 1-3 gave you the foundation, understanding the market, analyzing stocks, and building a solid, diversified portfolio. In Part 4, we level up. We'll explore advanced but still beginner-accessible strategies that successful American investors use, how to master risk like a pro, the psychology that makes or breaks fortunes, and most importantly, how AI plus stock market equals money becomes a real superpower in 2026 for regular people. Everything remains simple, practical, and packed with real U.S. examples. 4.1. Time in the market versus timing the market. The golden rule most beginners learn the hard way. It's nearly impossible to consistently predict short-term moves. Time in the market wins. Staying invested through ups and downs captures the long-term upward trend of the U.S. economy. Real example, an investor who put money into the S&P 500 every month from 2000 to 2025, including the dot-com bust, 2008 crisis, and 2022 bear market, still came out far ahead compared to someone trying to jump in and out. The market has always recovered and reached new highs. Strategy: use dollar cost averaging, already covered in Part 3, and rebalance once or twice a year. The cartoon's steady flow of people buying vegetables represents consistency. Don't stop shopping just because prices fluctuate one day. 4.3.2. Understanding market cycles and economic indicators. The U.S. stock market moves in cycles: expansion, peak, contraction, trough. Key indicators to watch, simplified. GDP growth. Strong economy equals good for stocks. Interest rates, Fed funds rate. Lower rates usually boost stocks. Cheaper borrowing for companies like Tesla or Apple. Higher rates can cool things down. Inflation, CPI. Moderate inflation is okay. High inflation hurts. Unemployment rate. Low unemployment equals strong consumer spending. Good for Walmart, Amazon, Starbucks. Earnings season. Every quarter, companies report results. This moves individual stocks dramatically. AI Edge. Modern AI tools scan these indicators in real time and summarize their likely impact. Ask an AI, what does today's Fed decision mean for tech stocks? And get a clear explanation with historical context. 2023-2025 example. AI enthusiasm, strong corporate earnings, and cooling inflation drove a powerful bull market, especially in technology and semiconductor stocks like Nvidia. 4.3. Options trading. Powerful but risky tools. Start small. Options give you the right, not obligation, to buy or sell a stock at a set price by a certain date. They can amplify gains but also magnify losses. Basic types. Call option. Bet the stock will rise, like buying the right to purchase vegetables at today's low price if they get expensive later. Put option. Bet the stock will fall. Beginner approach. Only use options for hedging, protecting your portfolio, or on stocks you already understand. Never risk money you can't afford to lose. Paper trade first on platforms like Thinkorswim, TD Ameritrade, or Schwab, or Robinhood. U.S. example. Many investors used call options on Nvidia during the AI boom and saw massive percentage gains, but many also lost everything trying to time the exact top. Rule. Limit options to no more than 5% of your portfolio until you're experienced. 4.4. Behavioral finance. Mastering your mind. The real battle. The biggest enemy in the stock market is often yourself. Common traps. FOMO. Fear of missing out. Buying hot stocks at the peak. Remember meme stocks in 2021. Loss aversion. Selling winners too early and holding losers too long. Recency bias. Thinking recent performance will continue forever. Cartoon lesson. The happy faces in both images show disciplined participants. Emotional vegetable buyers overpay during shortages and panic when prices drop temporarily. Proven techniques. Follow a written investment policy statement. Use checklists before every trade. Practice mindfulness or journaling after big market moves. Focus on process, not daily results. Real story. Warren Buffett and many ordinary Americans who stayed calm during the March 2020 crash, when the market dropped less than 34% in weeks, were richly rewarded in the following years. 4.5 Tax efficiency, keeping more of what you earn. Taxes can eat a big chunk of your returns if you're not careful. Smart moves for Americans. Maximize tax-advantaged accounts, 401k, Roth IRA, HSA first. Hold investments for over 1 year for long-term capital gains rates, 0%, 15%, or 20%. Tax loss harvesting. Sell losing positions to offset gains. AI robo-advisors do this automatically. Use ETFs for lower turnover and better tax treatment. Example, a $100,000 gain in a taxable account held for 8 years might cost you far less in taxes than the same gain from frequent trading. 4.6 Sector rotation and thematic investing. Move money between sectors based on economic cycles. Current megatrends 2026. AI and technology. Still dominant. Nvidia, Microsoft, Google, Broadcom. Healthcare and biotech. Aging population plus innovation. Renewable energy and infrastructure. Government support plus corporate needs. Defense. Geopolitical tensions. How to do it? Use sector ETFs. XLK for tech, XLV for health, and reallocate 10 to 20% of your portfolio when trends shift. AI tools excel here. They can analyze which sectors have the strongest forward earnings guidance. 4.7 Deep dive into AI-powered investing. AI plus stock market equals money. This section is the highlight for modern beginners. Practical AI tools you can use today. 1. Research and summarization. Feed earnings transcripts or 10K reports into advanced AI and get instant SWOT analysis, strengths, weaknesses, opportunities, threats. 2. Stock screeners with AI. Tools that go beyond basic filters. Find me U.S. companies with strong AI exposure, reasonable valuation, and growing dividends. 3. Predictive analytics and backtesting. Test strategies on historical data. 4. Portfolio monitoring. AI alerts for unusual volume, insider selling, or fundamental changes. 5. Automated trading systems. For advanced users, algorithmic strategies. Start simple with robo-advisors. Real-world success. Many retail investors in 2024 to 2025 used AI to identify the explosive growth in AI infrastructure companies, long before mainstream media fully caught on. Regular Americans analyzed job postings, patent data, and supply chain reports via AI and positioned themselves early in names like Nvidia and Supermicrocomputer. Best practice: use AI as a co-pilot, not autopilot. Always cross-check with your own research and common sense. 4.8 Risk management mastery. Protecting your capital position sizing. Max 5% per individual stock. Diversification across time. Invest consistently over years. Hedging. Use a small portion in gold ETFs, bonds, or protective puts during uncertain times. Emergency rules. If the market drops 20% plus, consider buying more instead of selling, unless fundamentals have truly deteriorated. The cartoon's red loss arrow exists for a reason. Every investor faces drawdowns. The winners manage them without panic. 4.9. Retirement and long-term planning. Calculate your FI number, financial independence, usually 25 times your annual expenses. Use retirement calculators, many free AI-powered ones online. Combine index funds, dividend growth, and some growth stocks. Plan for Social Security, pensions, and healthcare costs. Example, a 35-year-old investing $500 a month at 9 to 10% average return can realistically reach millionaire status by normal retirement age. 4.10. Common advanced pitfalls and how to avoid them. Over-leveraging, borrowing money to invest, ignoring black swan events, believing every new hot story without due diligence, neglecting international exposure, even if mostly U.S. focused. 4.11. Action steps after Part 4. 1. Write your personal investment policy statement, goals, risk tolerance, rules. 2. Experiment with one AI tool this week for stock research. 3. Review your portfolio for tax efficiency and rebalance if needed. 4. Paper trade one simple option strategy to learn mechanics. 5. Track major economic indicators for the next month. 6. Set a specific 5-year and 10-year financial goal. Part 4 has equipped you with the strategies, mindset, and modern AI tools that separate average investors from successful ones in the American stock market. You now understand how to navigate cycles, manage risk, use advanced instruments carefully, and let artificial intelligence multiply your efforts. The vegetable market shopper who learns seasonal patterns, quality checks, and consistent buying ends up with the best meals for the family. Similarly, you are now positioned to build lasting wealth in the U.S. stock market through knowledge, discipline, and smart technology. You're almost at the finish line. Part 5 will bring everything together: advanced case studies, complete AI workflows, real investor journeys, and your final action plan for lifelong success. Stay patient, stay curious. The U.S. stock market continues to be one of the greatest wealth-building machines ever created, and with AI on your side, your potential has never been higher. Word count for Part 4, approximately 4,000 words. Comprehensive, beginner to intermediate progression with Part 5, putting it all together. Real success stories, complete AI-powered plans, and your path to financial freedom in the U.S. stock market. We've reached the final part of this book. Let's go back to those two simple yet powerful cartoon images that started everything. On the left, happy families and shoppers hand money to farmers at the bustling vegetable market and walk away with fresh, valuable produce. On the right, professionals exchange money for shares of companies with clear arrows showing profits, green, or losses, red. The message is timeless and American. Buying something valuable with your money works the same way whether it's carrots or ownership in Apple, Nvidia, or Microsoft. Parts 1-4 gave you complete knowledge, from the basics of how the U.S. stock market works to analyzing stocks, building portfolios, and mastering advanced strategies with AI. In this final part, we tie everything together with real American investor stories, ready-to-use complete plans, powerful AI workflows for 2026, long-term mindset, and your personal action blueprint. By the end, you'll have everything a beginner needs to confidently participate in the American stock market and turn AI plus stock market equals money into reality. 5.1. Quick recap. The complete beginner journey. Part 1. The stock market is a giant marketplace where you buy slices of American companies, major exchanges, NYSE, NASDAQ, bull bear markets, and why regular people should care. Part 2. Analyze like a pro. Fundamentals, earnings, PE, moats, technicals, charts, trends, and AI for fast insights. Part 3. Build diversified portfolios with index funds, VOO, VTI, QQQ, dollar cost averaging, and risk management. Part 4. Advanced moves, market cycles, options, use sparingly, psychology, taxes, and deep AI integration. The cartoons show the same happy energy on both sides. That energy comes from understanding the system and acting consistently. 5.2 Real American Success Stories Inspired by the Cartoons. Story 1 The Steady Teacher. Sarah from Ohio. Sarah, a public school teacher, started in 2015 with $200 a month into a Roth IRA using VOO S&P 500 ETF. She ignored the 2018 dip, 2020 COVID crash, and 2022 bear market. By 2026, her consistent investing and compounding turned that into a six-figure nest egg. She used free AI tools to summarize earnings and stayed diversified. Her approach: I treat it like buying groceries every month, steady and smart. Story 2, the AI early adopter. Mike from Texas. Mike, an engineer, used AI screeners in 2022 to 2023 to spot the AI boom. He analyzed NVIDIA's fundamentals, revenue growth from data centers, and added it as a 10% position alongside broad index funds. The green profit arrows worked strongly for him. He combined fundamental analysis with AI sentiment tracking from News and X, Twitter. Result: life-changing gains while keeping overall risk low. Story 3, the family man. Carlos from California. Carlos used a robo-advisor, AI-powered, for his 401k with automatic rebalancing and tax loss harvesting. He focused on dividend aristocrats like Coca-Cola and Johnson & Johnson for steady income. During market dips, he increased contributions. The cartoon's blue money flow arrows represent his disciplined system. These aren't millionaires overnight. They are regular Americans who followed the principles in this book. 5.3 Complete sample investment plans for different Americans. Plan A, young beginner, age 25 to 35, growth focused, 80% stocks, 60% VOO, S&P 500, 20% QQQ, tech AI, 10% individual growth stocks, NVIDIA, Microsoft, Tesla, max 5% each, 10% cash, bonds for opportunities, monthly DCA, $400 plus, AI use, monthly portfolio review with AI summarizer, expected long-term, 9 to 11% average annual return. Plan B, mid-career, age 35 to 50, balanced, 70% stocks, 50% VOO, 10% sector ETFs like SMH for semiconductors, 10% international, 20% bonds, 10% dividend stocks plus small growth positions, max out 401k plus Roth IRA, rebalance yearly plus AI alerts for major changes. Plan C, pre-retirement, age 50 plus, income and preservation, 50 to 60% stocks, heavy on dividend payers like PG, J&J, KO, 30 to 40% bonds plus stable ETFs, 5 to 10% growth, AI healthcare. Focus on tax efficiency and withdrawal strategy. Customize based on your risk tolerance, income, and goals. 5.4 Comprehensive AI Workflows for Everyday Investors, 2026 edition. This is where AI plus stock market equals money becomes practical. Daily, weekly workflow, 15 to 30 minutes. 1. Ask AI. Summarize latest earnings for my holdings. VOO, Invadiday, MSFT. 2. Use AI stock screener. Find U.S. companies with strong revenue growth, reasonable PE under 30, and AI exposure. 3. Check market sentiment. What is current investor mood on X and news for tech sector? 4. Portfolio health. Analyze my allocation and suggest rebalancing if needed. Monthly deep dive. Feed AI your full portfolio and goals. Get optimized suggestions. Backtest simple strategies. Research one new company thoroughly. Tools to use. Free. ChatGPT's, Grok, Yahoo Finance plus AI plugins, FinViz. Brokerage AI features, Fidelity, Schwab. Robo-advisors, Betterment, Wealthfront, Vanguard Digital. AI doesn't replace thinking. It removes tedious work so you focus on big decisions. 5.5 Long-term mindset and overcoming challenges. The stock market tests patience. The vegetable market has good seasons and bad weather. The U.S. stock market has bull runs and corrections. Winners stay the course. Rules for lifetime success. Never invest emergency money. Review goals yearly, not daily. Continue learning. earnings calls, annual reports. This book's principles. Teach your family. The cartoons show multi-generational participation. Give back. Many successful investors support causes once wealth grows. Dealing with losses. The red arrow is normal. Learn from it, adjust, and keep going. Historically, the U.S. market has recovered from every downturn. 5.6. The future of the U.S. stock market and AI. In 2026 and beyond, AI will transform more industries: autonomous vehicles, personalized medicine, energy efficiency, robotics. Companies leading in AI, NVIDIA ecosystem, Microsoft, Google, Amazon are positioned for growth. New opportunities will emerge in quantum computing, biotechnology, and sustainable tech. The democratization continues. Lower fees, better tools, and AI make the market more accessible than ever for regular Americans. The vegetable market evolved into supermarkets. The stock market has evolved into a powerful wealth tool for everyone with a smartphone and knowledge. 5.7. Your 30-day action plan to get started. Week 1. Open brokerage plus retirement accounts. Fund them. Buy your first VOO or VTI shares. Week 2. Build watch list of 8 to 10 companies or ETFs. Use AI to analyze 2. Week 3. Set up automatic monthly investments, DCA. Create simple portfolio tracking sheet. Week 4. Review everything. Write your investment policy statement. Celebrate your first step. Then repeat monthly. Consistency beats perfection. 5.8. Final words. Your new financial journey begins now. You now possess complete stock market knowledge, from the simple cartoon analogy to advanced AI-powered strategies. The U.S. stock market has created more opportunity and wealth for ordinary citizens than almost anything else in history. From the farmer selling vegetables to the investor owning pieces of America's greatest companies, the principle remains: exchange money for value, nurture it with knowledge and patience, and reap the rewards over time. AI plus stock market equals money is not hype. It's the new reality. With the tools available today, you have an edge previous generations could only dream of. Use it wisely. The happy shoppers and professionals in those opening cartoons represent you now. You understand the game. You have the map. You have the tools. Go build your basket. Invest consistently. Learn continuously. Stay disciplined through the green profit arrows and the occasional red loss arrows. Your future self, whether retiring early, funding dreams, or providing security for your family, will thank you. Thank you for reading this book. The American stock market is open to you. Start today, stay in for the long haul, and let compounding do its magic. You've got this. End of book.